The money that is spent on medical expenses of your parents is eligible as a deductible income. All the money that your employer puts in your account in NPS is not even considered as income. Set off and carry forward your tax losses. You can claim a fair amount of HRA.
Hello and welcome to Investors Hangout. This weekly interaction to help you learn and understand savings and investment issues is brought to you by Aditya Birla Sun Life Mutual Fund and Value Research. Now, with the financial year coming to a close, it's the time when most of us are scrambling to make the last-minute tax-saving investments. And while the 8TC provisions are quite clear to most of us, we don't really know how else to save some more money. So watch today's episode. Today we'll give you 5 tax-saving hacks that you can use this year.
The first hack is the entitlement, the deduction which is available under Section 80D. The money that is spent on medical expenses of your parents is eligible as a deductible income. If your parents are over 60 years of age, up to 50,000 rupees spent on buying an insurance premium for them, or on their treatment, or on buying medicine is an eligible deduction. And if they are not 60 years old, then that limit is reduced to 25,000 rupees. The way to avail it is very straightforward. Just put it in your ITR and it is an eligible deduction. If you are in the highest tax bracket, it gets you a tax saving of 15,000 rupees. Everybody knows a Section 8TCCD that additional 50,000 rupees that you can put in NPS, and that is a deductible investment. So you put your money in 8TC up to 1.5 lakh rupees and 50,000 rupees in NPS, but your employer contribution, all the money that your employer puts in your account in NPS is not even considered as income. And but there are certain rules. There is no limit or restriction on the amount that the employer can contribute to your NPS. But if the employer's combined contribution, EPF plus NPS plus superannuation, exceeds 7.5 lakh, the excess beyond 7.5 lakh will be taxed. Further, the limit for NPS is 10% of the basic salary plus DA. In the case of a central government employee, it is 14%. If you have any flexibility with your employer that you can demand a compensation in this form, it actually becomes a tax sheltered income. Set off and carry forward your tax losses. This is a very interesting thing which all smart investors should derive benefit from this. And here Value Research Online, the portfolio tracker, will help you do this. Set up your portfolio, put all your transactions, and you can easily upload them. And the result of this is that it will be able to, it gives you a very clear breakup of what is your short-term capital gains, what is your long-term capital gains. And all the realized short-term capital gains and long-term capital gains is available. Not only that, even the unrealized capital gains and unrealized capital losses are also available. So if you have some realized capital gains, and if you have some unrealized capital losses, sell those investments and buy them again. And it will be able to offset your gains. That is number one. If you are sitting on some capital loss, but you haven't realized them, it will be recognized only if you realize them. So you can sell those investments, and now you are sitting on loss, put that money in the same investment. If you have made a long-term investment and right now they are in losses, you realize that loss, take and carry that loss on your books. In future, you will have some gains and it will be able to offset any gains over the next 7 years. Flexible benefit allowances. This is something which you should look at the policy from your employer and look for all the things that is available. Typically, generally it is of 2-3 kind. There is some kind of actual reimbursement possible for your telephone expenses, for your traveling expenses, or the money that you spend on fuel. And sometimes it is meal passes and Sodexo passes, it's normally provided for. So check with your accounts or finance department all the things that are available, and just be prepared with it, because around the middle of February you will be somebody will demand all the bills that you might have, the telephone bills, the fuel bills, and Sodexo passes that you buy, or your employer provides, that is a benefit that is available. It's not even considered income. This particular hack is very useful for self-employed people. Most people think that they can claim HRA only if they are in a job, they are getting a salary, and then they are entitled for that HRA deduction. But in this case, normally you can take a deduction of 5,000 rupees a month, 60,000 rupees of annual income can be offset or can be accounted for as your rent deduction. This is under section 80GG. So this is a unique thing. And this is particularly useful for self-employed people, that 60,000 rupee can be accounted for as rent paid. You can claim a fair amount of HRA even if you are living with your parents who own the home. And up to 1 lakh rupee, you don't even need a documentation. That is just a claim that you can make. Over 1 lakh rupee, you need a rent agreement and their PAN number to make that claim. And this is something which will entitle you can reduce your income substantially. And this is very handy for anybody who is self-employed. Ideally, all these should be done and planned for in the month of April so that you can plan and execute everything methodically month after month. But if you haven't done it, see all that you can do now, because tax save is money earned.
Well, that's all we have for you in today's episode. Hope you'll be able to save some more money this year. Keep watching this space for more information. If you like the show, do subscribe to our YouTube channel. Take care. Bye for now.